I'm significantly concerned about it because the amount of money and credit that has to be produced
Right.
and is budgeted is a large increase. And yet, if it's not spent, it produces its own problems. The markets have a sensitivity to that. So what it means, and then there's a supply-demand picture for bonds. And the way it looks is if you should get the selling of bonds, it worsens that supply-demand picture, because the way it works is the Treasury borrows and runs a deficit, but it can't produce money. So it has to sell bonds. And when it sells bonds, if there are not enough buyers of those bonds, then the Federal Reserve got to come in and print money and buy those bonds. And the world right now is over invested in US dollar denominated bonds, pension funds on the 60-40 mix, and they have negative real returns. And cash has a lot of negative real returns. So if there was a selling of that and a moving to other assets, stocks, other assets, commodities, other assets, or other places, other currencies, other real estate and the like, that selling worsens the supply-demand picture. And then if there's not enough demand, that means that the central bank has got to come in and print more money. So yes, it's not only the inflation that's in the pipeline or projected in that supply-demand balance, but it's also what it could be if there's a selling of debt instruments.
Hello guys, and welcome to another video of Crypto Money Talk. You heard Ray Dalio and how concerned he is about inflation. So, we are going to talk about the effects of inflation and how to tackle them with the help of strategies presented by famous billionaires. There are still many areas that are open to investment. All you need to do is choose the best moment and approach to do so. If you want to learn more, such as how to profit from the global financial crisis, watch the video through to the very end, because we are going to reveal everything about Robert Kiyosaki, Warren Buffett, and Michael Burry, and their strategies to benefit from the crisis. Jeremy Grantham and Michael Burry are preparing for a devastating crash in all financial markets. They are not the only experts to issue a warning that asset prices cannot be sustained indefinitely by rampant speculation fueled by government stimulus programs. The warning has also been issued by billionaire investors Leon Cooperman, Stanley Druckenmiller, and Jeffrey Gundlach. The same is true for Robert Kiyosaki, Kevin O'Leary, Gary Schilling, and other rich dad, poor dad authors and celebrities. Speaking specifically about Michael Burry, he claimed that the markets were in the midst of the greatest speculative bubble of all time in all things in June 2021, and claimed that retail investors were succumbing to the hype surrounding meme stocks and cryptocurrencies before the mother of all crashes. Additionally, Jeremy Grantham referred to the market as the real McCoy and called it a fully fledged epic bubble in January 2021. He contends that once you reach this level of overt super enthusiasm, the bubble always bursts within the following few months, not a few years. After that, Leon Cooperman also talked about this and further expressed his grave worries about the financial markets in May 2021. The billionaire investor and head of Omega Advisors said, "Everything I look at would suggest caution, intermediate to long term, would be the rule of the day. When this market has a reason to decline, it will decline so quickly that it will make your head spin." So you know there should be a huge thing coming out when so many investors and billionaires are saying the same thing from last year, but nobody listened to them and they ignored them. Who can stop storms? Hence, they've already arrived, and now the situation is to survive them. But how? If you want to learn all about this answer, then stick to the video until the end. Talking about Robert, and given his pessimistic outlook, it's no surprise that Kiyosaki mostly favors safe haven assets, such as gold and silver, as he believes that precious metals, unlike fiat money, cannot be printed out of thin air, and they've been helping investors preserve purchasing power for centuries. The price of gold has risen by about 8% year to date. The Russian invasion of Ukraine has given investors yet another reason to look into the yellow metal. While Kiyosaki owns gold, which he first purchased in 1972, he prefers silver in today's economic environment. Additionally, Kiyosaki revealed in a tweet that he had purchased 2,500 American Silver Eagle bullion coins and explained why he did so. As per his tweet, gold has already moved up and Bitcoin is still too expensive. Silver is 50% lower than its all-time high, and silver is both an industrial metal and a currency. And like others, he also believes that all bubbles eventually burst, and when they do, many people's wealth suffers significantly, but these large drops, on the other hand, create opportunities for those willing to buy the dip. As a result, Kiyosaki claims that the good thing about a bubble is that when it bursts, everything goes on sale, as the author began buying real estate at bargain prices during the 2008 financial crisis. Based on how much real estate has risen since then, it's safe to say that was a significant shift. Now, we hope things are quite clear to you that Kiyosaki believes that sooner or later we are going into every major crisis, and the best ones will be those who will have their wealth saved for that time to buy the best things like gold, silver, stocks, and Bitcoin. And this was all about how Robert prepared to survive the crisis. Now let's get into what Warren Buffett's strategies are to survive the inflation and this crisis. If you are familiar with Warren Buffett, you probably already know that he has always been adamant that the best course of action is to maintain an investment in stocks. Buffett, the chairman and CEO of Berkshire Hathaway, is perhaps best known for his maxim on dip buying. Be greedy when others are fearful, and be fearful when others are greedy. And given the sharp increase in prices, it's important to review some of Buffett's best recommendations for battling the giant corporate tapeworm he once described. Therefore, his first piece of advice is to invest in reputable companies with modest capital requirements. Like Buffett, who has long supported owning companies that generate significant returns on the capital invested in the company. Additionally, businesses with low capital requirements that can maintain their profits should fare better during periods of inflation than those that must continually make investments at ever-rising costs just to hold on to their position. Second, he suggests looking for businesses that can raise prices when inflation is higher. In the same way, he thinks that if a company can raise its prices, it has a significant advantage during times of high inflation because it can offset its own rising costs. An unregulated toll bridge would be the ideal asset to own in an inflationary environment, according to a statement made by Warren Buffett. And let's finally ask Robert if there's still an opportunity for the people or not.
Well, since we're on a gold channel, I'd say your biggest thing is put yourself on a gold standard and silver standard. The hard, start with one silver coin is about $20, or one gold coin is about $2,000. But put yourself on a gold and silver standard because they're still real money. And that was just, and it's now tier 1, according to the BIS, Bank of International Settlements, which Andy Schectman talks about. It was moved from gold was moved from tier 3 to tier 1, which means gold is money.
On the other hand, Gareth Soloway also said that right now he is only looking to invest in Bitcoin and Ethereum when it comes to investing with precautions. Gareth basically said that he is not sure of the survival of any other altcoin, but Bitcoin and Ethereum have survived all market crashes, and they are still in the top 10, which makes them quite authentic for investment if you are concerned about the security of your money. So that's the end of the video with the explanation of why billionaires are predicting the crash and how we can survive it. Give the video a thumbs up if you found it helpful, and be sure to subscribe to our channel for more content like it. See you later in the following video. Until then, goodbye.